Everyone, and thank you for joining us for another edition of the Exit Advisors Town Hall Series. My name is John Maneri, Managing Partner with Exit Advisors, along with Al Danto and Casey Bright. We are a lower middle market M&A advisory firm. We serve as the seller's sole representation during this process, and our approach is tailored to each individual client and their specific exit requirements. We get intimately involved as early as possible with the seller and do a deep dive into every aspect of the business. Just like getting a house ready to go to market, we develop strategies that will put the business in an optimal position prior to market so that we have the best opportunity for a successful exit. Today, we're going to be talking about a very hot topic of late, cryptocurrency. And we're thrilled to have two speakers today from Crypto EQ to help educate our audience about this emerging technology and also tell us a little bit about how cryptocurrency might play a role in a business exit. They are an independent cryptocurrency analysis and rating agency that provides unbiased, objective, and transparent research. Today, our first speaker will be Michael Thoma. Michael holds undergraduate and master's degrees in geology from LSU. He worked as a geologist in the oil and gas industry for about 7 years before discovering blockchain while working on a proof of concept at BHP in 2016. From that point on, he fell in love with crypto. Michael founded Crypto EQ with Spencer Randall and Brooks Vaughn in 2019, and he's the lead on Crypto EQ's fundamentals team, where he writes research reports on various projects and themes in the space. Our second speaker will be Sheldon Weisfeld. Sheldon is a seasoned entrepreneur and an early adopter of Bitcoin and the blockchain industry. He's co-founder and CEO of CoinVault ATM and Texas Bitcoin Embassy. Sheldon is also co-founder of Texas Coinitiative and has been in the forefront of regulatory matters, maintaining a steadfast position in compliance. A successful real estate investor and public speaker, Sheldon educates his audiences both on the importance of persistence as well as the evolution and incorporation of emerging technology. Sheldon sees any challenge as a direct opportunity and is motivated to continue working and advocating for the future of blockchain. Please use the chat feature to submit your questions, and we will address them at the end of the presentation. And now I'm going to turn it over to Michael.
Yeah, thanks a lot. Happy to be here. Very grateful for the opportunity and the introduction. So certainly appreciate the opportunity to talk about cryptocurrency here, along with Sheldon. So sorry for, we've covered a few of the early slides introducing us, so no reason to rehash those, but and I've singled out Sheldon here as well. But let's jump right into it. I think what we have booked is about 45 minutes of a structured presentation and then some Q&A at the end. As you said, feel free to ask questions as we go along. I don't believe I can see the chat box, so if anyone wants to call them out to me, I'd be happy to answer. But I am going to, as far as the actual presentation, I'll cover the first few sections and then turn it over to Sheldon to wrap for us. But here's a little bit of the overview. So I always like to start with a little bit of a base, why crypto and specifically Bitcoin is important. Then we'll dive into the more relevant stuff to the audience. So talk a little bit of business and crypto adoption, how to accept it, who's accepting it, and looking forward. And then, could you potentially keep Bitcoin or crypto on your books, as some other companies have done so. So let's dive in. So rather quickly, I'm sure everyone's heard about crypto and Bitcoin at this point, but it is a bit of a complex topic and there's a lot here, but I simply just want to reiterate that Bitcoin basically is the separation of money and the state. It is money that's not controlled by a nation state or a Federal Reserve. It is owned by everyone and audited by everyone. It is a new form of digital currency that is permissionless, it's global, decentralized, uncorruptible, seizure resistant. It's basically the most neutral, credibly neutral, transparent, auditable form of money that we have. a lot of people, you may have heard it be called e-gold or gold 2.0, and it's because it has incredibly scarce properties. It's hard to confiscate. It's a great store of value, but unlike gold, you can send it around on the internet. $100,000 of gold is quite heavy, and it's hard to. It's not very divisible. Bitcoin, on the other hand, you can send anywhere without needing anyone's permission. It's highly divisible. There's no counterparty risk. There's no middlemen. We're getting rid of all of the friction in the current financial banking sector and just allowing people to transact freely without the friction fees and middlemen and all of the issues that we see today. These are some of the biggest traits that I covered about what makes Bitcoin so special. And oftentimes when I talk with US people, they say, well, my dollar is great. I don't really see the need for new money. But actually, we just gave a talk yesterday to a company doing business in Argentina who is, unfortunately undergoing severe inflation, which is nothing new to them. But they're trying to figure out how to protect their wealth. The money there, no one wants. It halves every year, and it's a real problem for billions and billions of people across the world. Not everyone has the U.S. dollar. Not everyone has strong property rights. Many people live under dictatorships. So not everyone is blessed with having a functioning financial system. So Bitcoin is an out for them. It's an alternative, again, that all you need is a smartphone, an internet connection, and you're instantly connected to the global financial world. Whereas many times someone, say in Latin America or Africa, is excluded and kept down by the fact that they simply cannot save their wealth in a currency that devalues constantly. And here's just a quick one more slide, contrasting Bitcoin specifically to fiat. We all know that the rampant money printing of the past couple of years can't be done in Bitcoin. The supply schedule is transparent, it's programmatic, it's fixed, it's immutable. There's only so much Bitcoin, and we know when it's going to be printed or minted, and you cannot change that. And in our opinion, it's a money backed by math and cryptography rather than nation states, guns, and a few people in back rooms that set monetary policy. And so which one's more equitable, that's for you to decide, but we know where we stand. So that's a lot of all the preaching I'll probably be doing, hopefully for you guys. But let's move a little bit in the crypto adoption. So, Bitcoin's been around for about 13 years. I just spent a good bit explaining, why it's valuable, why it's important. But the space has evolved well past Bitcoin at this point. I'm sure you've heard of the tens of thousands of new tokens out there. It's our opinion at Crypto EQ and generally most people in the space that most of those, literally 99% of these tokens are pretty worthless or highly speculative or lotto tokens. They're just, they're not an honest attempt at any real novel or revolutionary innovation. But there are a handful that we like to pay attention to, cover on the website, and they fall under different sectors. So it's not just currencies anymore. It's not just a store of value. We've applied sort of a taxonomy or a categorization of these different tokens as they permeated into different sectors. And this is kind of where it may come in to play for some people in the audience here. You can have, of course, your currencies, but then there's also utility tokens, which we can get into. But there are specific privacy coins. There's stable coins, which we'll talk about. There's fractionalized NFTs and there's security tokens. And there's tokens backed by real commodities like real estate, gold, what have you. And so people are trying out and experimenting tons of new ideas by using a blockchain and trying to, again, remove some of the inefficiencies or friction from the old system. Some work, some don't. But you should know that these things are kind of like snowflakes in a lot of instances. It's not an apples to apples comparison. And so it's really important to understand that when you evaluate or consider using or incorporating one of these tokens into your strategy or your business. So with that, a blossoming of a whole bunch of different experiments, and overall, we'll use the crypto markets as a whole. These are some of the adoption metrics, like I mentioned. Really kicked off in 2009 with Bitcoin, and it was super, small time then with only insiders and cypherpunks. And so really until 2017 is when we saw a huge proliferation in mainstream adoption. And so that's where this chart on the left kicks off, 2017 up until recent. You can see we're comparing crypto users to the internet, because a lot of this, there are strong analogies that can be drawn. And these are networks, essentially. The internet is a network. Money is sort of a network. The more people that use it, the more valuable it becomes, the more liquidity you have, the better. And you can see what kind of trajectory we're on. So we oftentimes like to compare it to the internet. Finding numbers for global adoption or US adoption is tough sometimes, but generally, as a general rule, global adoption is less than probably 1%. The US, it's much higher, closer to 20, 30, sometimes people say 35% of people have used Bitcoin or crypto or own it, and using and owning is quite different. But so you can find numbers to kind of fit your narrative, but the undeniable truth is that more people know about it, more people do own these things, and there are more use cases and people actually transacting in these with every passing year. On the right, you can see one individual study that tried to forecast a bit out into the future, but the general trend is up, and so that's what's important. And it would behoove most people, most businesses, to understand the technology at least a high level, which is why we're here today. But also, maybe have a plan to see how you can incorporate it and can it improve your business. So I'm going to be quick with all of these because this is a little insider baseball, but just some examples about some of the things beyond just payments and currencies, how people are using cryptocurrency. This first example is called Ethereum Name Service. Many of you have probably heard of Ethereum. It is the second biggest cryptocurrency, and it's much more programmable money and a financial settlement layer, almost a neutral Web 3.0 compared to Bitcoin. But what you can do on Ethereum is basically create decentralized domain names. So you can see the headlines here. Budweiser purchased beer.eth for $100,000, and below that, Puma did the same thing. They bought. So these are brands that are using this as a marketing ploy, but purchasing these basically screen names or domain names on a blockchain that they then own and can be associated with their brand. And as a user, I have one of these. You can put your name on it, your business on it, and it can literally be the front end to your wallet or your website. People can just type in Budweiser.eth and would be able to send payment to them. So it's kind of a catch-all, almost like a Twitter handle that can be used for payments and things beyond that, that also live on the blockchain. No one can take it from you, and doesn't rely on a centralized backend server for its uptime. Okay, the metaverse. We've all heard, I'm sure, about the metaverse. Your definition is probably as good as mine at this point. We're still extremely early with the metaverse. A lot of people are trying a lot of different things. As you can see with the headline here, Gucci buys virtual land and a metaverse. A lot of these high-end businesses, again, probably more marketing than anything, but they're setting up shops in the virtual world as more and more people live their lives online and shop online. And no need to read the text down there, but what it's saying is that Gucci and a lot of these high-end retailers are big-time believers in the virtual experience, and this slide here backs that up. So this is land sales in a virtual world. So it's sometimes hard to get your head around, why would somebody pay for this imaginary plot of land, but people are doing it to the tune of $2 billion. So again, I want to stress, this is extremely, extremely nascent. A lot of these projects, again, are just simply marketing ploys, and people are basically using them as billboards in a virtual world. But it is the new frontier, and a lot of people love to experiment. So there's going to be a lot of talk about the metaverse for the next decade. And some of the things that we've seen so far is where you can go wrong, in my opinion, and a lot of the cryptocurrency enthusiasts' opinion. So JP Morgan opens a bank in the metaverse. I don't think that's going to be necessary. There's not a need for having your banking services that live in the metaverse. And then you've probably heard of Facebook or Meta trying to create their own metaverse. And something tells me that the future of the metaverse is not going to live solely on a centralized Web 2.0 fading social media platform that takes also a 50% cut of all of the money that moves, that changes hands there. So that was a little shocking to see that Facebook actually thought that was going to be viable. And then finally, I put a little headline about CBDCs, so a central bank digital currency. You may have heard about this, but this is governments across the world who are looking to quote unquote use blockchain, to create their own central bank digital currency. It's still very new. Several nations have tried it or are experimenting with it. Most notably, China is doing it. And it is very problematic. I just wanted to include this and say that central bank digital currencies are not cryptocurrencies. They are basically tools in which a government can, even to a greater degree, control how people use their money. So obviously the Chinese can, with their social credit score, can say, no, you can't use this money because you failed to pass this threshold, or you have to use this money by this expiration date. So there's a lot that can go wrong when you give a government granular control of the money down to that fidelity. So I just wanted to stress that CBDCs, you're going to hear a lot about them. It's not the same thing as crypto. And then one thing we've all heard, I'm sure, is NFTs, or non-fungible tokens. This was super hot for the past year or so. We're starting to cool down, as all markets have cooled down over the past couple of months. But what this is, so generally what you've seen is people buy art NFTs. So a non-fungible token is exactly what it says. It is not fungible, which means, just like a dollar in your wallet is the same as any other dollar. These are unique, specific, backed by the blockchain that verifies that they're unique tokens or instances of artwork, or it could prove your existence at a concert or a ticket that you bought at a sporting event. But these are catching steam, and there's a lot of hype around these, especially around the art scene. But the beauty is that a lot of times you can program more into an NFT than you could with a piece of artwork. So if you create, as an artist, if you create a piece of artwork, you can have that initial sale, but then you lose all the revenue after that. You can embed royalties in these every time it transacts on the secondhand market. There's a lot that you can, further do to retain some of your revenue as an artist or a creator in this NFT or Web 3.0 world. And then finally, digital autonomous organizations. So it's a mouthful. We call them DAOs for short. It's basically a decentralized LLC. They are it could no longer do you have to go through the actual legal process or set up your business in one central geographic location, but communities across the globe can band together, create a DAO. And it's a very loose, fluid form of collaboration and business decisions that are governed by the collective. So you may have heard last year there was a DAO called Constitution DAO that spun up in 1 week and was able to raise $47 million to try and buy the Declaration of Independence. Unfortunately, they did not win it, but it shows just how fast this thing was able to, how much momentum it was able to garner in just 1 week and collect all this money. And then imagine what you can do when you have more time, or maybe a more innovative idea than just buying a collectible. But rather than just funny headlines, so they're the top one here, crypto-friendly Wyoming officially recognizes DAO. So Wyoming is very crypto-friendly. They're on the frontier of this kind of stuff, but they're actually getting recognized in the traditional legal system as well. So you'll hear, I'm sure, a lot about DAOs in the future. And on the bottom left here, I mentioned, so last year in December 2021, 2 actual cryptocurrency projects, so these are native crypto projects, were run by DAOs, and they decided to merge. They did an M&A of basically 2 projects to create one. This was the first of its kind. It was kind of, as you would imagine, kind of a mess, but it's probably a show of things to come, especially as the market turns, M&A picks up. And we're going to talk a bit about M&A in the traditional financial world in a second. But this is our first instance, and probably the first of many, of an M&A in the actual cryptocurrency ecosystem. So we've talked about adoption. And one of the biggest ways to, I guess, measure adoption is money, right? The money that goes into the crypto ecosystem. And so 2021 was a calendar year. 2022 could beat it if things don't go incredibly sour. But as this chart shows, you can see every quarter for the past couple of years, VC money has been pouring in and growing, roughly 9 billion during Q1 of this year. You can read the stats here, more companies, more deals, more money. It just shows that even though the market's turning, there's a lot of well-funded VCs that have to deploy capital. They're well positioned, especially if, now that evaluations are down, things are a little bit more sobering. There's still a ton of fire or gasoline that we can pour on this fire. And so we suffered a pretty brutal bear market in 2018 and 2019. Hopefully it doesn't last quite as long this time. And with all this well-funded capital and with more users and eyeballs on it, the space could turn around and continue its momentum that it's built over the past 4 or 5 years. And then I mentioned it, but M&A in crypto. So this again is more traditional businesses. And what I wanted to stress here was it's still early days, and a lot of this text, what it says is that close to 90% of the deals that were done in 2020 and before were basically around trading firms or mining firms. So mining is big in the crypto space, but that number is starting to fall as more and more gets built out, more of this Web3, more of these NFTs, more of everything else. That number was down to 81% M&A deals. So there's a lot of room now. A lot of it, it's not just a one-trick pony show where it's Bitcoin and you buy Bitcoin miners. There's now, again, hundreds, thousands of projects trying to basically overlap with every imaginable use case. And with the market down at this moment, these M&A numbers will probably shoot up. So we can talk a bit about that if you have specific questions with some of the trends or strategies or maybe specific sectors that are ripe for M&A, especially with firms like or neobanks like Robinhood or some of the Strike and Stripe, people that have kind of one foot in each door. You could see a lot of action on that front. So I'm burning through these because I want to turn it over to Sheldon and give him time to talk as well. But I want to speak a little bit about actually accepting crypto. So we talked about, all the different avenues it can touch, but then how in the world do you accept something that is so incredibly volatile? That's usually the pushback that we get. You might be surprised to know that tons of people are already doing it. I just named a few here, but big names like Overstock, Subway, Playboy, Microsoft, they're explicitly accepting Bitcoin mostly, but sometimes they accept other forms of cryptocurrency. And then there's also a whole industry around crypto debit cards or crypto cards, where you can either fund them with cryptocurrency and spend your crypto on a Visa card, or you can convert it to fiat. And there's plenty of people that are working on abstracting away that converting Bitcoin to US dollars for you and handling the taxable event and just making it very seamless. Just today, or actually maybe yesterday, was this headline at the bottom about how Robinhood is creating a non-custodial crypto wallet. So that was big news because Robinhood has tens of millions of users, and now they can take their crypto, put it in a wallet of their own, and they're able to spend that and send that anywhere as they see fit, as before they were kind of locked in on the Robinhood app. On the right is just another diagram showing that retail sentiment and businesses are open to using and accepting crypto, and it's only growing over the years. And mostly the volatility and the education around the assets are the big sticking point. So like with anything, like learning how to use the internet or anything else, it's going to take some time. And again, there are companies that are going to improve the user interface, remove all of the basically all of the friction about knowing how to convert, and it should become much more seamless as time goes on. I wanted to mention stable coins. So I mentioned it earlier. Some of you may not have heard of them, but when you think of cryptocurrency, Again, most people think Bitcoin, they think crazy price swings. You may be surprised to know that there are stable assets, stable coins on cryptocurrency or on a blockchain. So what these are basically US dollar or synthetic US dollars that live and run on a blockchain network rather than traditional financial rails like the banking system, the SWIFT system. There's different flavors of stablecoins. You may have heard the most popular one is called Tether, and oftentimes it's in the news because people have concerns about, is Tether manipulating the market, or is it fully backed one-to-one with the collateral that they say they have? And I wanted to spend a little bit of time and kind of sifting through those. So Tether is a stable coin. Excuse me, here we go. That basically all it is someone will put $1, one actual US dollar, into the Tether in with the Tether business, and then they will mint one Tether on a blockchain. So it's backed one-to-one with a US dollar. You can see its basket of collateral here on the right. They have 44% in treasury bills, 31% in commercial paper, but you can see they do quarterly audits now. They've been run through the ringer by the New York Attorney General. And as of last week, I think over the last 2 weeks, they did $7 billion in redemptions as the market crashed. And a lot of people were afraid that, oh boy, we're finally going to learn, do they have the money that they say they have? And they were able to honor those redemptions without any issues. So their solvency should no longer be a concern per se. They have some of the deepest, most liquid markets in all of the crypto space. I think there's over, about $100 billion of Tether out there. And why somebody would want a synthetic US dollar on a blockchain rail is for all the reasons I mentioned earlier. There's less middlemen, there's less trust in the transaction, there's faster settlement times, and it's a global system that it's especially beneficial for remittance payments or cross-border payments, because no longer does someone have to pay 7, 10, 15% of the transaction and remittance fees just for crossing some arbitrary land border. I'm actually in Chile myself right now, and was walking around a touristy area last week, and there was a super long line. We wondered, oh boy, what amazing attraction is this thing here? And it was actually just a money transfer place and a Forex exchange business. And so it's still a little crazy that people have to queue for an hour or two out of their day to try and send money and lose money on the conversion, and then give 15% money wise, or just for sending money across borders. So this reduces the cost, the time, and makes a lot of people happy when sending across borders. USDC is one more of the fiat-backed stablecoins. It's very similar to Tether, except this one is ultra compliant, US-based. There's hardly any concerns with their regulatory compliance, their backing. It is basically built to be a government coin. So unfortunately, it's not very decentralized. They can blacklist a certain address if they deem you to be, dealing in money laundering or illegal activities. So it's acting sort of like a money market or a bank, where you're trusting the Center Consortium and Coinbase, but you still get all the benefits of the actual blockchain as well. And then one more point about accepting Bitcoin that most people aren't aware of. So yes, Bitcoin can, be slow when transacting on the main layer. So that's a lot of times, that's the other big criticism we get is, confirmation is not for a whole hour. So how can you actually use anything that takes that long? Well, Bitcoin is building a base layer on the main Bitcoin layer that we talked about so far. It's not meant for your daily coffee transactions or anything. It is more of a bearer instrument like gold, essentially. But you can build atop that. You can build an entire financial system from the base. That's what we've done with the Visa network and everything in traditional finance. And that's what the Bitcoin Lightning Network is doing in the Bitcoin world. So this is basically a system totally designed for an exchange of the currency, for a means of payment. So you create a payment channel between you, the consumer, or another retailer, and you can send thousands and thousands of transactions on this Bitcoin Lightning Network. But then when you're done transacting, or you finally want to tally up, you send it to the Bitcoin layer 1 and you only pay 1 transaction fee. So the best analogy is a bar tab. When you go to a bar, you may buy 3, 4, 5 beers, but you don't pay for every single one every single time. You just tally up at the end of the night. That's essentially what the Bitcoin Lightning Network does. And the beauty is that it inherits a lot of the security from the Bitcoin network. You still get the same censorship resistance, you get privacy improvements, and it allows you to conduct many transactions for fractions of a penny, if you'd like. And so you get the cost savings, and you get the security and the decentralization. And on top of that, so the Bitcoin Lightning Network, it's been in production for about 5 years. One of the big breakthroughs was when El Salvador last year made Bitcoin legal tender. They implemented the Lightning Network, onboarded a lot of people. But another company, Strike, is making big waves as well. Strike has partnered with Shopify just this year. And basically what Strike does is what I mentioned is another one of these companies that is abstracting away the complexity with using Bitcoin. So you can get a Strike app and you can fund it with fiat US dollars, you can fund it with Bitcoin, and you can pay with Bitcoin or dollars, and you don't even know that you're doing it, essentially. So if you only want to take exposure to the US dollar, you can do that. Or if you want to pay in strictly Bitcoin, you can do that. But what it's doing is just giving people optionality and the best of both worlds, essentially. And you can see on the right, the Lightning channel growth over the years. It's because of innovations like this, and because the technology is finally becoming robust enough and user friendly enough, and you're no longer having to write code to interact with this stuff. We're on the doorstep of real world adoption here. Okay, and actually, I want to turn this one over to Sheldon now. Yeah, take it away from here with the Bitcoin for a real estate sale, Sheldon.
Well, Michael, thank you very much. Hey, guys, if I could give Michael Thoma a round of applause, I would do that for him right here, right now, because I can tell you he has gone through a ton of information, and you might be spinning your head saying, what was that all about? Well, what that's all about is Michael bringing to light the reality of what is the future. And so I would congratulate first everybody who's here today from Exit Advisors, recognizing, like the title says, understanding crypto, don't become a dinosaur. So when we talk about Bitcoin, myself being an entrepreneur and a business guy, I started a cellular telephone company in the early 90s before the telecommunications deregulation laws were passed. And then fast forward, I got involved in the Bitcoin world. I found it very fascinating and intriguing. And I would think each of you here as entrepreneurs are looking at this subject matter, trying to understand how do you wrap your head around it, because you don't want to become a dinosaur. What I'll bring to light is when we talk about accepting Bitcoin and why would you want to accept Bitcoin, recognize there's over 19,000 different blockchain projects being reported on today by CoinMarketCap, representing about a 1.4 trillion or $1.3 trillion market. That's what you're after. That's what I'm after as an entrepreneur. How do we get in that economic pool of money? How do we attract this customer who has this mass amount of wealth available to? But I want to back up for a moment and talk about when we talk about Home Depot accepting Bitcoin, or Whole Foods accepting Bitcoin, or Starbucks accepting Bitcoin. Some people may think that's literally a peer-to-peer transaction. That's me coming in with my wallet on my phone and me paying. And so many of us are now familiar with Apple Pay and Google Pay and Samsung Pay, where the card or the account related to the transaction is embedded in the phone data that's wirelessly transmitted to the device. And so what's happening is the Winklevoss twins, who were famous for their involvement with Facebook, as I'm assuming most people know, have a wallet, an exchange called Gemini. And Gemini, and through the Winklevoss twins, they have a payment platform called Flexa. Flexa is actually the back-end app that processes the payments. So many of you accept Visa, MasterCard, Discover. You don't actually have an account with Visa, MasterCard, Discover. You have an account with your financial institution who provides you the gateway that handles the collections of those funds. The disadvantage to that relationship is, number one, is that you are not guaranteed to bear the burden of financial responsibility to pay those from you today with your credit card, with their credit card. They present the credit card. Sometime in the future, they file a claim against their credit card merchant or financial institution that that transaction was not a legitimate transaction. They charge you back 100% of the charge, plus you will pay the 2, 3, or 4% fees. Why do you accept cryptocurrency? Why do you accept Bitcoin? As Michael Dell did at Dell Computers in the early days, he actually offered you a discount for paying in Bitcoin because Bitcoin is a non-reversible transaction. And that's what I want to encourage each of you today, is to explore the opportunity of how not to become the dinosaur. I've been in technology a long time. When Wayne Huizenga, who ran Blockbuster Video, publicly said Netflix wasn't going to work because there wasn't enough bandwidth and the restrictions of the ability to deliver the data. Well, folks, today, Bitcoin, the blockchain, and the internet is an integral utility, and it will survive. When the likes of Jamie Dimon from JP Chase says that we're all stupid, those of us that are in Bitcoin just a few short number of years ago, and today, JP Chase is jumping on the bandwagon, fighting for their piece of the pie. There's a lot of different ways to accept Bitcoin today, through direct wallet, Nerd Wallet, MetaMask, Coinbase Merchant Services, Kraken, Gemini, BitPay. And we didn't provide all that detail to you because there's a lot of sources out there. How will you incorporate the evolution of finance, money, verification of assets? If it's the likes of a diamond, if it's the likes of the title to your house, the title to your car, the title to your boat. Today, I had the opportunity to work with a company out of Harlingen, Texas, trying to rent a piece of property here in Houston, Texas. And the guy said, I wish you would take Bitcoin. I said, oh, we do accept Bitcoin for payment. And the slide that we're looking at today related to real estate is Tony Busby, the local attorney in Houston, Texas, who ran for mayor, decided to sell his mansion in River Oaks. He listed it with Douglas Ellerman. And as a result of them listing the house, specifically referenced that they're accepting Bitcoin. Michael, if you'll flip the page to the next slide, and you'll see there in that bottom right section where it's circled that they accept Bitcoin. That one line alone got them over 200 global exposures around the world on this house for sale. What will you do to differentiate your products and your services to be able to stand out from the rest, regardless of what industry that you're in? Because this technology is transcending all industries: finance, real estate, precious metals, and other asset classes that are being oriented into a non-fungible token to authenticate, validate, verify, and maintain a fungible, being the ability to move the asset and also be able to authenticate the validity of the asset. So there's a company called ICE out of New York. They've taken diamonds. They authenticate a diamond through an NFT. You can either buy the NFT directly backed, correlated directly to a certified diamond. And if you want to take possession of the diamond, they will physically ship you the diamond. Versus, are you buying diamonds as an investment? So what I want to do is we're going to leave the last few minutes here for some questions and answers, because I think it's real important that those that have questions, please put your questions into the chat box, and the moderator can certainly read those questions to us, and we're more than happy to address them. I want to also point out that this slide deck will be made available to everybody. There was a question early on, if you didn't read that in the chat channel, so that you can refer to this information. Additionally, I want to invite you to look at cryptoeq.io. Cryptoeq.io is a data analytics company. When I had the chance to meet Michael and the other two founders, Brooks and Spencer Randall, a number of years ago, and we would sit around here in Houston and have conversations about the evolution of this technology. And for them to take their motivations and their educational and analytic skills and to create a deliverable product that CryptoEQ represents is, in my opinion, a phenomenal opportunity. And that's why I put my money obviously in the deal as a partner and investor in Crypto EQ. Exit Advisors is positioning you to be poised to be at the forefront of your exit strategy. And I think incorporating this into your exit is important. We had a slide here, Michael, on some of the publicly traded companies. Do we have that available? Bitcoin on the books. And so to recognize that there are public companies that have taken their corporate treasuries and allocated that treasury out of a cash asset into a crypto asset, the likes of Bitcoin, is a very interesting, to me, it's a very interesting strategy. From the premise of we're talking about shareholder value. If the underlying asset is depreciating, as we recognize is happening with the US dollar, and you could take that asset and put that back into an asset class that has liquidity, has fungibility, what Bitcoin represents, the reality is it exposes your balance sheet to market volatility. While many of the publicly traded companies have significant price appreciation in light of the fact that we've had a pullback and consolidation in the pricing, I think that the net result to their financial balance sheets, as evidenced by the information is presented in this particular slide, still supports the fact that they've made a good decision. And so I would challenge each person on this call to consider having a diversified portfolio, if not just in your company, for the benefit of your family and your personal financial diversification, to hold some aspects of cryptocurrency. Recognize that approximately 45% of the total market cap is Bitcoin, approximately 20% is Ethereum, and the remaining 40% are alternative coins. As I referenced, there's a little over 19,000 projects represented today in coin market cap, with approximately 547 different exchanges. So what that represents is a huge market where you might find liquidity. And at this point, I'm going to turn it back over to our moderators, to our host today at Exit Advisors. Thank you for the opportunity to share with your audience.
Thanks, Sheldon. Thank you, Michael. I think we're making great time here. We had some questions come in that I would love for you guys to answer for our audience. The first one came in from David. He's asking if you have any recommended crypto primer or reference books for those that are starting from scratch. Michael, Sheldon, either of you want to take that one?
I would start that with the Bitcoin Standard, which gives you reference as to Bitcoin and its value proposition. And the really basics is you might a basic report. Michael, maybe we can make that available to everybody if we could facilitate sending them out the starter pack.
Yeah, I think that's certainly possible. And yeah, the Bitcoin Standard is a great one, especially when trying to go down, basically it's a little overview of monetary history and then where Bitcoin fits in and all of that. So if you like a little bit of history, if you like money, that's a good read. Also, it's a little heavy on the Austrian economics, so it's an economics book as well. And another good one is called Mastering Bitcoin. It was written by Andreas Antonopoulos. He is a huge critical figure in the history of Bitcoin. He's a great advocate, and he's written several books. And you know, the back half is a little technical. It's more for developers almost about how the actual blockchain works, and gets very, very kind of computer heavy. But the beginning half, which I've read many times, is a great, great, great explainer, especially if you come at this technology, if you come from more of the technology side rather than the monetary history side.
Excellent. Well, I highly recommend the audience, if they're looking to get started, take a look at those two books. We had another question from someone in the attendance here. It's from John Hunter. His question is on use case. How does cryptocurrency for investors, speculators today evolve into a currency that is equitable, accessible, understandable, and usable for all people around the world? Is this a good thing? Why?
Wow, that's a great question. I'm going to tackle that with first is trust and the lack thereof, unfortunately, that we're experiencing with our governments, not just the US government, but globally, the lack of trust. And so to open up the opportunity of a borderless, seamless, fungible financial network where global business is not going to be controlled by some semblance of sanctions. And you might think that that's extremely complex, but if we really are entrepreneurs and we're really providing services and products, then why should we be controlled as to who we can provide products and services to? Additionally, I would add that inside of a diversified portfolio is the evolutions of science, math, and tech present just that. And its integration and implementation into our businesses, creating an immutable record, a record that does not require a trusted third party that could possibly not be so trustworthy. And so in this case, I personally, as an entrepreneur, I personally feel that cryptocurrency is a very important asset to be included in a diverse. Will you have a comment on that, or did you freeze? Yeah, I just got a message from Michael that his internet did go out, and so he's frozen. So that's my comments, everybody. Shoot me another question, Casey. Let's see if I can make up a story and an answer.
No, great. Hopefully, John, that answers your question. We have a couple more that came in. One of them from Ricardo. He's asking, what are some attributes that you personally consider important in a cryptocurrency?
As an entrepreneur, an investor, and an early adopter of new projects, the attribute to the cryptocurrency is specifically the team and the community that is building out the project. My investment thesis is simply three-legged is where it starts. And the most important thing is the team. I just returned late last night from Silicon Valley, meeting with the founder of a project that I'm super enthusiastic about. And the idea is to be able to sit down with the technologists and listen to what they have to say, just like I did years ago with Michael Thoma, Spencer Randall, and Brooks when they created Crypto EQ. And then identify what's the problem they're looking to address. And is the problem a real problem? And ultimately, what is the TAM, the total addressable market? What's the value of that market? And with those three basic fundamentals being addressed is now my basis of the thesis in the projects that I take equity interest or buy tokens in their pre-sales, or commonly known as ICOs, initial coin offerings.
Great. Well, there's a good follow-up question here, Sheldon. This is from MD. He says, how do we best handle the volatility of crypto, especially if we allow them as payment?
So that's a really good question, because we're talking about a payment gateway and a payment rail. So while you operate a global business and you may have a customer in Mexico who has peso exposure, your settlement is your currency that you choose to settle in. And that settlement currency is the currency that you're still exposed to the volatility risk that that currency itself is exposed to. What I recommend most people do, understanding that there's only three ways to get cryptocurrency today. The three fundamental ways of getting it is you provide computing power or services to the network that processes the transactions, you earn the reward, that's mining. The second way is selling a product or a service, and in selling that product or service, you're receiving payment in the cryptocurrency. And the third way is literally buying the cryptocurrency. I launched CoinVault ATM in 2013, deployed our first ATM in 2014. And what we did was we provided a fiat gateway. inside of the settlement payment options, accepting cryptocurrency with most of the merchant service processing services, there are settlement options. If you want to settle 70% in fiat currency and you want to maintain 30% exposure to the underlying crypto payment method that was used, the likes of whatever it was, if it's Ethereum, if it's Bitcoin, if it's Bitcoin Cash. The alternative is just to do a direct conversion. Today, you're settling a $100 transaction. It's being paid through Bitcoin. Bitcoin's being priced to market at today's exchange rate, and you turn around and you convert that $100 worth of Bitcoin into $100 USD, and that's how you settle. And so as a retail merchant, if your concern is about price volatility, then you do an immediate transaction through your merchant service processing platform that you choose.
Perfect. Thanks, Sheldon. I think that was a great answer. We've got one here from Eduardo. In your opinion, where do you see Bitcoin bottoming out at with this bear market and with regulation? Will it stay there before the BTC halving in May 2024?
If I could have the crystal ball, I would have sold everything I had. I'd have lived under the bridge in 2013, and I could be anywhere in the world I would choose to today. The challenge we're faced with is, do you really have a good, clear trajectory of understanding what the price variations are going to be? I can't foretell the future. When people ask me, what do I think the bottom is? I think today is as good as any day to buy Bitcoin. At the same time, in any investment class, understanding DCA, dollar cost averaging, and the value proposition that dollar cost averaging represents is simply a matter of you buy on the dips and you continue to buy as it appreciates so that you continue to dollar cost average yourself, because we can all look back with lethargy of regret from March of 2020 when Bitcoin went to $3,000. And we could also fast forward and say, well, I got a lethargy of regret too, because it hit 60 something thousand bucks and I didn't sell anything. And now I'm sitting back down at 30 something $1,000. But as entrepreneurs, we inherently are risk takers. We take a certain calculated risk, and we're going to be exposed regardless of what business industry we're in as entrepreneurs. My answer to folks is, don't try to figure out where the bottom is. You're exposed to the inflationary volatility that fiat's exposed to. Diversify it, build a portfolio, own some Bitcoin, own some Ethereum, look at some of the other projects, look at crypto EQ. I don't give this information as investment advice. This is my personal opinion. And that at some point, your crypto portfolio might far exceed your net worth in any other asset classes. And all I can do is speak on that as a matter of fact, because people think I was lucky. Some people think I was stupid. I've had financial advisors at major financial institutions tell me over the course of the volatility exposure, you need to take all your money off the table. I'm reminded, if you never put it at risk, you'll never have an opportunity to win. You have to be willing to take a certain amount of risk. And intestinal fortitude is critical. If you can't handle the volatility risk and it affects your health, don't be in this space. Don't be an entrepreneur. Go get a job, punch a clock, work for somebody else, make their goals and dreams come true. I think we are on this call today as entrepreneurs, and we understand the risk is inherent to what we do. But remember, we also get paid last. We pay our help first, we get paid last. And some people may think we're lucky. No, we're not lucky. We get up early, we stay up late, we do the things other people don't do, and we get the results that other people will never get. And they will call us lucky. And so for everybody on this call, thanks for being lucky.
Hey, Michael, I see you joined us. Did you want to chime in there too?
Yeah, appreciate it. So how am I sounding? And sorry, I hope I didn't derail with the little internet issues I had.
All good. Sound good.
Yeah, no, Sheldon nailed it. Basically echo everything he said. What I wanted to add, I suppose, is that, even us at Crypto AQ, who eat, sleep, and breathe this kind of stuff, it's impossible to perfectly time the market. Everyone knows that. But what we can do is there are certain fundamental on-chain analysis and metrics that you can look to help get a better picture of when a market is hot and when a market is, oversold, undersold. And that's part of what we do. Although I'm certainly not a trader, I don't like to trade. I simply do the kind of buy and hold that Sheldon's talking about. What I will say is that what we've learned over the past couple of years in the Bitcoin and crypto world is that Bitcoin used to be an uncorrelated asset. It kind of lived on its own in the periphery. But now, as adoption has grown, more institutional investors have come in. It has become extremely correlated with specifically tech stocks. So we are living and dying by the QQQ or the growth stocks, essentially, for better or worse. And so with that being the new paradigm or regime that we find ourselves in, the macro drives everything. You have to, and if you want to become an expert in the macro economy, then have at it. But we are kind of held or constrained by what's going on with the dollar, with the Fed, and everything else. So that's stuff that we look at Crypto EQ. Again, not everyone has the time of day to kind of look at that stuff. But over the take-home stat is that there's never been a 4-year period. Anyone that's ever bought Bitcoin and held it for longer than 3.5, 4 years is always up over its entirety of its existence. And so that's the outlook we take. We think this is a decades-long kind of play. Even though that we follow it on a daily basis, we don't advise that people try and pay attention to the short-term volatility noise. I always tell my friends and my buddies, stock away a little lunch money into it and kind of set it and forget it, as Sheldon said.
Awesome. Well, hey guys, I think we have time for one more question. This one again is from John Herder. Real interesting question. He's asking if either of you can expound a bit more on the value of DAOs, upsides and downsides.
So I spoke on it a bit, Sheldon. I know you didn't get to say anything. Do you have an opinion, or would you like me to take this one?
I would comment on a decentralized autonomous organization. The whole idea of being able to create an infrastructure where it all works in a consensus environment. We're going to see the evolution of what we know as Wall Street and publicly traded companies evolve into this. The downside to it is you can't manipulate it. Once the rules are written in, it's coded, and the business model will follow according to those rules. If you want to, sorry, I had a call coming on. If you want to explore this, I would answer the question with a very simple answer. Will you be the likes of Blockbuster, or will you be Netflix? Are you going to be the dinosaur, or are you going to flourish and move ahead? And I think a DAO is a very important evolution of the integration of this technology in traditional business as we know it. Michael, anything else?
No, I totally agree. I think it is just another iteration of where everything is going. With the introduction of the blockchain, with crypto, things are going to change, and the cap table and the shareholders and your LPs and just those dynamics are going to change as the world becomes more global and as things open up, and basically everyone can have access to your business or your DAO essentially. And so it's still, again, I stress early days. It's a very messy process, and we'll have to see how regulators, whether they open it with open arms or accept it with open arms, or some keep it at arm's length. But it's an exciting time and just a new way to organize people in this digital age.
Well, let me see if we can squeeze in one last question. This came in from Sensei. He is asking, what is your opinion on UST's failure, and do you think USDT Tether has a risk of depegging? Sheldon or Michael, do you want to wrap up the conversation with that?
I would answer that with real simple that's a super high level question. When it works beautifully. When it doesn't work, it breaks. And that's exactly what we saw happen, trying to do a correlated asset. Whereas when we take a look at the other stable coins that are backed dollar for dollar, we don't have that happening. What I would venture to ask folks to take a look at is what's going to be happening in Davos here in the next few days at the World Economic Forum that's taking place there. And a particular project, full disclosure, I'm involved in the project as an early founder, early adopter, is backed by Integral. Integral is one of the world's largest Forex trading platforms, doing $60 billion a day, 1 million transactions per day, representing over 200 financial institutions around the world. Will be integrating, implementing, and discussing the Codex Labs platform of how they'll take traditional finance, centralized finance, integrated into a decentralized platform. And so when we talk about a UST, this algorithmically correlated, supposed to have been a stable dollar, stable token, stable dollar, I personally have exposure there myself in the Lunaterra project, the underlying project, did not have exposure to the UST itself. But this is really a good lesson that we're all going to learn. Thank goodness it wasn't $400 billion, it was only $40 billion. And we know that education is expensive, guys. You go to school and invest a whole bunch of time, or you be an entrepreneur and you invest your money and we get to learn. And so the lesson we learned is that doesn't work. And just like Albert Einstein goes through a bunch of tests and experiments to identify which filament really works, sometimes it's not about knowing what does work, it's about knowing what doesn't work.
Yep.
Michael, any other comment?
I would say I would love to wrap up here. I think
Yes.
Sheldon, Michael, thank you so much for coming on. We appreciated you educating our audience. Any final words, John, or from anyone else?
Great job, guys. It was a great session, and I think everybody learned a bunch. I know I did.
All right. Well, we promise to get everyone the presentation and a copy of the recording as well in just the next day or two. So keep a lookout for that in case you were in and out or joined us late. And I'm sure the guys, Michael and Sheldon, will be happy to field any questions now a little bit more detailed than we covered today as well.
Absolutely. Thanks a lot, guys.
Everybody have a great day. Thank you for having us.
Thanks, guys.
Okay, we're going to sign off. Bye now.